Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, October the 15th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, and how that comes in to impact the markets with my market analysis. And I do the same thing for you folks out there, except I'm going a little bit further in these market commentaries where I layer on top of it these option strategies that I use in my daily portfolio. And what I've done also is gone a bit further and layered on some guidelines for you all out there that I've learned over my 25 years of experience trading options in order to streamline your process, in order to find the right strategy for any given assumption. It's not just going out there and buying puts or buying calls for a bullish or bearish assumption. What we're doing here is finding our assumption, finding the right strategy based on everything that's going on in and around that underlying. All right, so without further ado, let's get on with the economic data because we've got some stuff to go over here. Philly Fed manufacturing coming in at 32.3, expected to be 14.4, so much better than expected there on the manufacturing front. We also got unemployment claims, weekly unemployment claims coming in at 898,000, expected to be 810,000. So higher than expected, and they've slightly revised the previous number up a little bit, so a little bit worse, and that number wasn't great to begin with. Empire State Manufacturing, slightly lower than expected at 10.5, expected to be 13.9. Importer prices right in line with expectations there. And we also got natural gas storages at 46 billion cubic feet, and crude oil inventories coming in at a drawdown of 3.8 million barrels, more, about 1.5 million more than the expected, coming in at negative 2.1 million. We also have Captain Quarles and Lagarde speaking today and Kashgari later on. All right, so let's talk about the overall economic data. Oh, we also got the Philly Fed yesterday, I think it was, or not the Philly Fed, I'm sorry, the Beige Book yesterday. Was that yesterday that we got that? I thought we were getting Beige Book yesterday. All right. Anyway, I thought it was supposed to be coming out pretty soon here, which is it's an important economic data point, despite the fact that they don't talk a whole lot about it, because the Fed really judges what they're going to do in the last minute, like a final hour. They take a look at this thing. It's called the Blue Book, and it is basically the Beige Book, but with updated economic data points. It comes out, the Beige Book comes out a couple of weeks ahead of time. Blue Book, we don't get to see, only the Fed gets to see. All right, crude oil was trying to make a move to the upside. Surprisingly, though, we're seeing some weakness throughout the day with that bigger than expected drawdown in crude oil inventories, but it is right there in and around that $40 a barrel, so nothing to really see here. Gold futures, unchanged for the most part. The market's kind of quiet despite the fact that we've had some good economic data here, and there's a lot of things swirling in and around this whole stimulus package as well. A lot of rhetoric going back and forth. We've got bonds just unchanged, but making it look like they are not going to get back up to that value area. As a matter of fact, we start looking at this whole chart set up right here, and it is looking a little bit more bearish, like a topping, because we came up and tested this Fibonacci. It's really starting to fail there. I would expect that the market is going to want to roll over just a little bit, despite the fact that I don't think that we're going to see interest rates rise anytime soon, but we might get a little bit more information out of the FOMC members and the ECB president Lagarde later on. All right, so VIX is higher today and was spiking as the equities were falling out of bed. We're starting to see them make that claw back, and I was going to say earlier when I was preparing for this earlier this morning, I started seeing those markets start to creep back higher in the equities, and was going to say it was going to start looking like a hammer or a hangman doji at the bottom there, where it was going to be a pattern where it looked like we were going to start reversing. Now we're starting to make that move. Dow Jones right here, as you can see, the futures are just getting ready to break above that 9-day simple moving average. That would give more room to the upside, really make the chart setup look pretty good. NASDAQ is having some trouble here, as you can see. as the tech sector really being a laggard. I'm not really surprised about this, and we've been talking about this for quite some time, that it's kind of a game of catch-up at this point where the blue chips have really been lagging, but I think that more and more people are thinking about this reopening trade. We're seeing more and more cases of corona. It seems like, the infection rate is kind of going up a little bit. Yes, we are testing more and more people, so of course that means that there's probably more people being captured in those statistics. But we're also seeing the mortality rate not be people are not dying as of this like we were expecting, and people are recovering quite nicely. So they're saying that the mutation of COVID might be a weaker in becoming weaker in its strength, although it is more contagious. That's kind of where I wanted to go with that. All right, so NASDAQ obviously leading charge to the downside, not having a whole lot of help there, down 1.5%. And E-mini S&Ps trying to make their move back above that 9-day simple moving average. We are right now. And again, making it look like if we started finishing up near the highs, I think it's going to make that chart pattern look like we are finding a bottom there. You can see overnight was pretty bearish. Most of the travel and leisure really struggling, and canceling of flights, canceling of cruise ships, all of that stuff really coming in full force overnight. And I think that that's been a big leader here. We're trying to make a bit of clawback, like I said there. All right, so let's talk about the trades that I've done. UAL, I told you guys I was looking at this trade to play to the downside. This travel and leisure sector is just horrific at this point in time. Doesn't look like they're going to get a stimulus package anytime soon. I talked about it. Even if all of the crew members for the cabin crew members for these airlines worked for free, they still would not be profitable. So that is a major headwind. That just shows you how much they are losing money on all of these flights and everything else. So with that said, I went in and sold the October 38 calls in there for 32 cents yesterday. I bought them back today for 4 cents. As you can see, the market is coming off. So I got the directional move. Not a whole lot of volatility. I really waited to the last second to put this trade on, and was not thrilled about it because there's just not a whole lot of volatility in these travel and leisures and the airlines, or even in the bank sector for that matter. So it's pretty hard right now at the front end of this earnings season. We do have a lot more in store for us, especially next week, really starting to ramp up these earnings. So I'm going to keep some powder dry, keep some cash on the sidelines ready for those earnings, and not going to add any trades just willy-nilly right now. So with that being said, that's all I've got for you, other than I'm preparing for today's webinar. So go to protraderstrategies.com, sign up for that. It's one of my favorite strategies, and it is on the short iron butterfly. All right, so check that one out, because it is a great strategy, good risk reward, and I'll show you how to set that up when we have a market neutral assumption. There's a lot of stocks out there right now that are going to struggle because we've had those all-time highs. We've pulled back a little bit. We're seeing some consolidation across the board here, and I think that this might be a good time to implement a strategy like this around a market neutral assumption. So check that out. Go to protraderstrategies.com. And that's all I've got for you, other than one last thing. Take a moment to read over this disclosure. And if you can't take that, take it easy.